Rising fuel and food costs pushed U.S. inflation up to 7.9% through February, the highest in over 40 years. Although inflation has been significantly higher in 2021 and now in 2022, inflation itself is not at all a new thing. The United States alone has experienced several periods in the past of high inflation. The most recent period was in the 1970s when the United States experienced double-digit inflation numbers. That being said, the way they calculate inflation is different than how they calculated it in the past. And if we use the way that they calculated inflation in the past, today, inflation would likely be much higher. Due to the recent war in Ukraine and all of the supply chain disruptions that are going on around the world, inflation isn't expected to slow down anytime soon. Janet Yellen, who is the former Federal Reserve President and the current Treasury Secretary, has stated recently that Americans will likely continue to see uncomfortably high inflation over the next 12 months. So what can you do to protect yourself from inflation? Well, there's a few things. Let's dive into them. The first way is to buy things in bulk. Every time you walk into the grocery stores nowadays, it seems like prices have gone up yet again. If you can afford to buy in bulk and have the storage at home, the cost per product is usually much lower. Plus, if inflation continues to go up over the next year, then you're essentially getting the product at a discount since the price will be higher in the future. Let's take non-perishable foods or products, for example, such as toothpaste, canned foods, toilet paper, paper towels. If you bought these things in bulk right now and they go up 10% a year from now, then by buying those products now, you're essentially saving 10% since you won't have to buy them in the near future when the prices go up. You're going to use these products anyways, so buying a little bit more if you can afford to do so could be a good investment if the prices continue to go up. Number 2, invest in stocks with pricing power. Companies that have problems raising their prices due to inflation are best to avoid during inflationary periods. Travel and entertainment stocks tend to get hit harder during inflationary periods because customers are usually more willing to give up those products or services in order to cut back on expenses when everything is going up in price. Companies such as oil stocks or agricultural stocks or any company that is so ingrained into society that people would feel lost without them will typically do well during inflationary periods because they'll be able to raise their prices as inflation hits and the demand or their customers will continue to buy. If you don't like playing the stock picking game, you could always invest in the S&P 500. Most of the 500 companies within the funds have proven themselves during tough times and are a core part of everyday life. Number 3, ask for a raise or job hop to stay ahead of inflation. US wages and salaries have seen a record increase. The bad news about that though is that inflation raised 7% in 2021, basically meaning that inflation gave the average worker a 2.3% pay cut last year. Now I know, it's not always easy to ask your manager for a raise. Managers across the board are aware with what's going on, and with over 11 million open jobs in the US, they will likely not want to lose you. Your best bet is to come to the negotiation table with your homework. It's worth mentioning the increase of cost of living, and ideally, if you can find similar positions to yours that are paying more using Glassdoor, you could use that as a reference, along with highlighting your accomplishments and your responsibilities at the company you're working for. If they hesitate to give you a raise based on what you present, you might be better off looking for another job anyways. Job hopping in general tends to bring the best potential chance for a raise. Depending on the work you do, many employees who do job hop earn anywhere from 8 to 10% more by joining another company. Number 4, invest in I-bonds. Do you have cash sitting around but you don't want to invest it in the stock market? Maybe you need to use that cash within the next year or two and you don't want to risk throwing that in the stock market? Then you should consider I-bonds. I-bonds are a special US government savings bond created to protect investors from inflation. At the time of this video, they are yielding around 7% per year, but do keep in mind that the interest rate on these bonds changes every 6 months depending on what the CPI or the inflation data is. So if inflation starts to go down, the interest rate on these bonds will also go down, or if the inflation rate continues to go up, then the interest rate on these bonds will also continue to go up. The thing is though, you can only contribute $10,000 per year per taxpayer with these bonds, and you must hold them for 1 year minimum before you can actually cash out. I'm going to leave a link in the description with more information on I-bonds if you're interested in learning more about these. Number 5, Avoid variable interest rate debt. Although debt can be used to your advantage during inflationary periods, variable interest rates for debt, such as for credit cards, mortgages, or car payments, are not a good idea during inflationary times. And the reason why is because during inflationary periods, it becomes more likely that the Federal Reserve will start to increase the interest rates. And if that happens, if you have variable interest rate debt, that interest rate on your debt is going to go up as well. So if you have to take on debt, opt in for fixed interest rate debt and avoid variable interest rate debt. That way you won't get hit as hard if interest rates start to go up. Okay, and number 6, invest in real estate. Owning your home is another approach you can take to protect yourself from inflation. Renting during inflationary periods leaves you more vulnerable to rent increases as prices in general continue to go up. Renters across the United States are already facing sharp rent increases, averaging up to 40% in some cities. Although the real estate market can get hit hard if the Federal Reserve increases interest rates fast, real estate has always been a solid investment over the long run. So if you decide to purchase a home, make sure it's something you can afford, and make sure you're comfortable with making the monthly payments over the years to come. I wrote a blog post a couple of weeks ago that goes over the 8 unexpected costs of buying a home. I'm going to leave the link to that blog post in the description, so check that out if that's something you're interested in. All right, and number 7, invest in collectibles. As surprising as it might sound, collectibles tend to do well during inflationary periods. Collectibles such as anything with gold and silver, rare coins, exclusive trading cards, luxury watches, or even antique rings tend to do well during inflationary periods. Anything that is worth far more than its original price can be considered a collectible. And the reason why collectibles tend to do well is because the value of collectibles tends to be based on emotional factors and due to the collectibles supply versus demand nature. So when there's more money in the overall economy causing inflation, collectibles are going to tend to adjust with all that money around because there's only a certain supply of the collectibles, which is what makes them collectibles to begin with. At the end of the day, the best way to protect yourself during inflationary periods is to sell your dollars for things that can't be printed. Hard assets that hold their value, especially during times of high inflation. Predicting how long inflation will last is extremely difficult to do. Your best bet is to diversify around a couple of the strategies we talked about in this video based on your personal financial situation. Well, that's it for today. I hope this quick video gave you a little bit more insight on how you can protect yourself during high inflation periods. If you have any questions or any suggestions on what I should cover next, let me know in the comments. It's always nice to hear from people who watch my videos. And again, thank you so much for watching. I really appreciate it.